This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The European Union told member states on Wednesday to cut gas usage by 15% until March as an emergency step after President Vladimir Putin warned that Russian supplies sent via the biggest pipeline to Europe could be reduced further and might even stop. Deliveries via Nord Stream 1, which accounts for more than a third of Russian gas exports to the EU, are due to resume on Thursday after a 10-day halt for annual maintenance. The head of Germany's network regulator, Klaus Müller, said that initial nominations for gas flows via Nord Stream into Germany stood at 800 gigawatt-hours, GWh, for July 21, adding this could still change by tomorrow.
Russia held its spot as China's top oil supplier for a second month in June as Chinese buyers cashed in on lower-priced supplies, slashing more costly shipments from Saudi Arabia, data showed on Wednesday. Imports of Russian oil, including supplies pumped via the East Siberia Pacific Ocean pipeline and seaborne shipments from Russia's European and Far Eastern ports, totaled 7.29 million tons, up nearly 10% from a year ago, according to data from the Chinese General Administration of Customs. Still, Russian supplies in June, equivalent to about 1.77 million barrels per day, BPD, were below May's record of close to 2 million barrels of oil per day, a level analysts had expected to be maintained.
Moving on to the top news in the energy sector.
U.S. crude oil stockpiles edged lower last week, but gasoline inventories posted a larger than expected build on weakened demand, the Energy Information Administration said on Wednesday. Crude inventories fell by 446,000 barrels in the week to July 15 to 426.6 million barrels, compared with expectations in a Reuters poll for a 1.4 million barrel rise. Demand figures rebounded from the previous week's sharp fall, and product supplied rose to 21 million barrels per day. However, gasoline demand continued to sag, and supply of that product over the last 4 weeks was 8.7 million barrels of oil per day, or about 7.6% lower than the same time a year ago.
India has cut a windfall tax on oil producers and refiners and exempted gasoline from an export levy, less than 3 weeks after it imposed the two charges. Shares in oil companies that will benefit from the move rose. Reliance Industries jumped 4.3%, Oil India 8.8%, Oil and Natural Gas Corp 6.8% and Vedanta 4.3%. The government said in a statement an export tax of 6 rupees a litre no longer applied to gasoline. It had also reduced duty on diesel and aviation fuel exports by 2 rupees a litre to 10 rupees and 4 rupees a litre, respectively, it said. A windfall tax on domestically produced crude oil was cut to 17,000 rupees a tonne from 23,250 rupees.
Next, we have the top news in metal markets.
Global primary aluminium output in June rose 1.95% year-on-year to 5.65 million tonnes. Data from the International Aluminium Institute, IAI, showed on Wednesday. Estimated Chinese production was 3.33 million tons in June, the IAI data showed.
Coking coal prices in China tumbled to a 7-month low on Wednesday, weighed down by prospects of higher supply and sustained weakness in demand for the steelmaking raw material, while fresh hopes of economic stimulus supported iron ore. The most traded September coking coal contract on the Dalian Commodity Exchange ended daytime trade 6.7% lower at 1,922 yuan and 50 fen, $284.78, a ton, after hitting 1,885 yuan and 50 fen, its weakest level since December 13. Coke, the processed form of coking coal used in iron ore smelting, shed 3.6% to 2,590 yuan and 50 fen a ton. We will now look at the top news in the agricultural sector. China's soybean imports from Brazil in June fell while shipments from the United States increased, customs data showed on Wednesday, as high prices curbed demand for South American cargoes. China, the world's top soybean buyer, imported 7.24 million tons of the oilseed from Brazil in June, down from 10.48 million tons a year earlier, data from the General Administration of Customs showed. Total imports last month dropped 23% from a year before to 8.25 million tons, as high global prices and weak demand curbed appetite for the oilseed, customs data showed earlier.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.